Economists on Wall Street this week totally freaked out, calling for a recession and the possibility of emergency rate cuts as early as only a few days away. But as we know, that's not what happened. The markets hit the daily 200 and they started to bounce back up with incredible volatility across the board. But how do markets really look heading into a recession? In today's video, we take a look at whether we're actually showing those types of signs. And of course, we need to discuss that level over the last 24 hours that we thought we'd find the buyers at. How did we do it? And more importantly, is it replicable? Also, are there other opportunities around? Well, turns out there are. And in today's video, we'll be exploring what's going on in stocks, cryptos, and commodities together. Join us, guys. This will be a great one. Well, welcome back everyone to the Daily Show, and what a 24 hours it's been again with markets bulling up off the unemployment figure. But as we know, markets tend to use these reasons as an excuse, and actually it was already structuring towards the bull side, which we've got a special video coming up later on today's show to discuss. We actually called it live using market structure and nothing to do with the news itself. Let's now go over, though, to the idea of bubbles, recessions, and how we actually enter into one, because there are well-known bubbles out there, and we are not currently tracking the same way as we have for something like a 1929 or a 2000. And in some ways, you should be thankful, and we all should be, that we're not doing this. Both of these ended in lost decades, periods of time that were terrible for investors, and if you got stuck in the top, you really didn't make any money. Now, on top of this, the big thing here is, could we go higher? Well, the simple answer is yes, and we need to be looking for those signs. Remember, we'll continue to track this, and if we ever do get into these types of twilight zones, we'll have to be incredibly careful, because at those points, things don't recover the way you think over the next coming years after the crash. Let's talk about recessions, though, and how, on average, the cycles have played out into a recession over the last 12 business cycles and where we are right now. Now, of course, this data is May of 24th, so we know it's a little bit outdated, so it'll look like that at this stage. But it doesn't really matter because in all cases, it doesn't look the same as any of the others. You'll almost notice that all of them, except for this one here being the Feb 2021, basically continued to weaken, or they were starting to struggle and turn over. So they were starting to form more double topping style patterns and weakness patterns, not melting up like the current market's been. Now, Feb 2020, while I actually believe was going into a recession anyway, of course it did have that so-called black swan event, and that was something that did change the overall structure. But either way, we're more likely in late cycle investing, which we do need to discuss. So what about the pullback this year? We've talked a lot about this one, the negative 8% so far. Is that in line with the Fed pivoting? Well, the answer is yes. Again, we have some data on that we've talked about in the today's show, and we've talked about in our previous shows, so definitely check those out. And you'll notice that 5 to 10% is the most statistically likely thing to happen in pullbacks over the year. 35% of the time that occurs, and it's much harder to call some of those 20 to 25% drop-offs because they're just not that statistically likely. What about the S&P 500's freak out this week? Well, we've got some interesting data here as well. You'll notice that this is the S&P 500 when it goes below its Bollinger Band and it's extended. Now, it's gone below negative 1.8. Why? Well, it was a capitulation on markets with a VIX 65, which is so high, so rare. We barely ever see this type of read. Usually, it's at the end of a massive sell-off into peak fear, and we got it out of nowhere at that point. So it was absolutely wild. Now, this only happens 0.44% of the time here from Sentiment Trader, and you'll notice that annualized returns from this point are actually really positive. So it's not a bad counterintuitive kind of like, look at it, see max fear, buy into the market. We've also got some other things here, such as this one, which is showing the Goldman Sachs US Financial Conditions Index versus, of course, the market itself. And you'll notice that in these cases, when we get to these red dots, they haven't exactly been the worst by the dip zones when it comes to the performance after these events. This one here, we still saw a bounce back in 2020, but guess what? It did drop off. So it is still possible we make a new low, but in all of these red kind of levels, we've seen a bounce. And that's exactly what we're finding at the time of this recording. And of course, what we expect to have maybe some problems in the future, which we'll go through where they are at later on. Now, I thought it'd be worth reiterating this. Follow us over on X if you're interested. We posted this one in terms of some of the bull case stats. Now, of course, there are bear case stats. There are all sorts of things going on. But these are some of the ones we want to pay the most amount of attention to. Never has the S&P 500 made 38 all-time highs and not made at least one more. Okay, that's definitely an interesting stat. The Whaley Breadth Thrust, which we're bringing up later in today's show, the 70 Breadth Thrust, has also generally always signaled 6-month bull records. The Whaley is close to 100% as well if you look at every read it's ever done. There's also been one market all-time high set in July over the last 40 years. So again, it's the odds of it being the high is unlikely. And CTA's flash panic, Goldman Sachs fear, and obviously we've seen even the Bollinger being quite a rare event. Generally all contrarian setups. So with that being along with having 2 consecutive very strong quarters, we tend to not think that the markets are going into a recession. And this idea of emergency rate cuts, and this is a great screener for you to take a snapshot of if you want to keep in the future, is probably unlikely. Remember, if the Fed does come out and do a emergency rate cut, especially in the modern era, that has meant very bad things for the market. So unless you're a big bear, you don't really want that. But if it does come, usually that means something is broken. We just don't know about it yet. And generally, they'll only emergency rate cut if it truly is real news. Something is very bad out there in the markets. S&P 500 up plus 10% in consecutive quarters. We already know the stats are quite bullish towards this. Euphoria meter, interesting read here. I thought I'd include it from top-down charts. Not too sure whether this is actually a great read on markets. It doesn't look like it based on the history. But yeah, it's still quite high. So Euphoria, according to this metric anyway, does look like it's still in the markets. Other metrics though, such as this one, big shocks take time to ease back. We noticed that we got the largest vol shock ever recorded this week, and that's just how wild things really were. This is due to zero DTEs and also the way that the market was hedged. And we know that from a lot of these read points, we generally have seen at least a bullish bounce initially. Sometimes markets will pull up to 61.8 fibs, which we'll look at in a moment. And there are usually recoveries followed by sometimes chop and sometimes even a new low. Now, moving average direction dashboard from Grant Hawkridge here has, I think, some interesting reads underneath it. If you look at the percentage of stocks above their 50-day, there is 1 or 2 sectors that you usually would not see if the economy was sick. Number 1, financials. 69.4% of financials are still trading above their 50-day. And it's rising. So that is not a sign of usually weakness in the economy. Remember, financials are debt. They're the debt machines of our economies. So for them to be doing okay, that's not a bad sign. Another one is real estate, 80.2%. This has been one of the best sectors of the last 30 days. And a lot of people haven't been looking at it. We've mentioned it quite a few times. And this particular market has been doing very well. And often that is quite linked to debt. So really, we've got a late cycle style investment being utilities, which we love here on the channel. We've got financials and real estate doing well. And yeah, the rest of the market's taking a pause, but it's not what you would see in usually a global financial meltdown or crisis. When we get that kind of VIX level, we know again the stats are pretty positive towards the bull end. We know that monthly put call skew levels hit massive sell-offs. Again, you put like lines over all of these, you'll notice again they usually see bounces. And then it comes time to say, okay, well, what about if the Federal Reserve does do a cut? What if they do the September cut, which seems more and more likely? How would a market usually react to that? Well, here's an interesting chart, which are the Russell 2000 coming into rate cuts from the Fed. And you'll notice that 1 month out, we tend to get a sell. Then we go up into the rate cut itself. The rate cut comes and goes weak, and then we see strength. Now, this will be an interesting point to see whether that's what happens, but it's clear that this is normal, and we usually do get rate cuts that come through, and they tend to have weakness coming into the rate cut, weakness after the rate cut initially, and then we find out whether we're in a recessionary market or not. And that's why it'll be important to track all of the previous recessionary markets and see whether this market actually looks anything like any of them, because at this point it really doesn't. So this is what could happen. Remember, this is just a read of no recession over the next 12 months. So it's still very possible we could go up here and then have a recession afterwards. And that's actually what I suspect will occur versus this chart here, which is rate cut. Oh, okay, everything's going to explode. And we've talked about this one quite a few times, so definitely check out our previous videos. It also makes sense to the negative 8% we saw this week. We know that 2 months before we get rate cuts, we have seen markets with negative 8, negative 7 before. We also saw that they struggled around the rate cut itself and that they had very good returns 2 months in particular after the rate cut had happened. If we do get a double dip into October this year, which some stats say that we could, wow, it's going to be an amazing November. You know, you really be looking at that, and certainly we'll be following everything that happens in this market structure. Whaley breadth thrust, I thought I'd include the stats for you guys so you can see how good it is over the next kind of 6 to 9 months, and also why we expected weakness over the last 2.5 weeks, because remember, we saw this quite a while ago. It's normal to get it in a thrust. Some of you in the comment section said we've never seen a Whaley thrust at the highs. Well, that's because what happens is the Whaley thrust does happen at the highs, the market dips often after that, then goes on to make new all-time highs. And that's why we never see it at the highs, because it's actually quite a good bullish stat. So yeah, certainly a good comment, but I do read your comments, by the way, guys. Thank you so much for putting them down below, and appreciate your support as well very much there. But in this case, yeah, that's pretty much why Whaley has never been at all-time highs, because it's always been correct in this case. Semiconductors, 6.36 on the session. Beautiful to see them bounce back. Of course, we are watching them very closely. NVDA and lots of others coming back to super buy zones. If you manage to buy the secondary dip, congrats. And what that actually means is that you are looking at the markets with a very good temperament. You are looking, you are being patient, and you are buying when it is safer to do so. XLK was the second best, so it was risk on, and gold stocks did also recover. And the last 5 days now, still mostly defensive is up top. But the main key thing here is that we're not seeing an absolute sell-off in the major financials. So major financials still holding very, very nicely. Let's have a look at the S&P 500. A lot of people are making out that this is a terrifying chart. I don't think it's terrifying. I think also we're facing, of course, this high here, which we'll go through in a moment. And a lot of people are mentioning downward volume. And I kind of want to just debunk that. It's incredibly normal to see downward volume, especially coming off such incredible volatility. Over here, you have more stabilized volume. But let's have a look at some of the drop-offs again. Here we have a market that crashes. Then it seems to go down in volume a little bit. Again, pretty normal. And if we go through other ones, we often do see downward volume over the next couple of sessions as we're bouncing, downward volume here as well. So don't expect volume to necessarily be like, wow, it has to go up with the markets. I think it's a bit of a trap that a lot of people get into, and I just thought I'd mention that. Now, inside candle, yes, it technically is inside this wick high to wick low, so that usually means more explosive volatility is coming. And the key level for the bulls, should we be able to get through this zone up here, which we'll look at in the futures, is the daily 20 moving average and the gap fill. This also happens to be a major fib, and I like that level quite a lot. So 54.40, if we do get up there, that's going to be where the bears will sit next. Let's have a look at the futures market action. You'll notice here that we have these two wick rejections. We'll clip over to a video in just a moment showing you that we actually found this buy live, and I haven't changed anything here on the charts. So we found it live in our Market Masters Club, but basically, we came straight up to the resistance. This would be an excellent TP zone or scale back zone, which is something we discussed. And if the market is able to get through this structure here, so get through this high, especially if it coils, I would like to see it coil here for a bit during the futures action. And then if it breaches out, again, 54.40 makes the most amount of sense. So we'll see in just a moment, but that's actually the kind of one that we're looking at. For bears, 53.30, this area here, they've got to sell it off. I'm not sure they will be able to do so, but if it sells here again, I'm not confident in the 51.70 buy. I would say that markets will go to a new low and then possibly see a buy from that point. Daily 200 SMA would be what I would look for at that point. Markets at this stage, they're starting to turn a little bit more bullish, though, that's for sure. Good to have you here, guys. Let's have a quick look at this start of the session. We noticed that we're sitting around the 61.8, and you'll notice there's two rejection wick-style candles. I've got this on the 2-hour chart. So basically, it kind of looks negative here, and I think Chris mentioned it looks like a tweeze towards the negative side. But it looks like the market's trying to find a buy above that. And that's why, to me, Tweezers are obviously going to be seen on some time frames, but if you're a member of the Day Trading Masterclass, you would know that this is actually already active for the longs, and especially if it squeezes past here, of course, the supply being around this point as well, it should start to go back up. So very important level here around 52.20. I think a closure on the 2 hour above those tweezers, plus getting past this zone here, which is, I'll give you the exact price, I think plus a close of 52.25. Should be quite positive towards the markets. Okay, well, let's have a look now at the options levels. And the big one here is going to be the 5,300 zone. We know that OPEX is coming up soon for August. It's pretty early in August. And we also know that 5,300 is where all of the puts are at this stage. So the market may be incentivized to try to hold above 5,300 for the next session, just to not pay those out. And really, this is the major level. Are we still in negative gamma? Yes, barely, but we did manage to get rid of a lot of that negative gamma over the last 24 hours because of the unemployment numbers. When we look out to the next week, we've finally got some calls back in the market. 5,200 is the put support, and around 53.50 is where we have those calls. So again, if the market is going to go up to, let's say, 54.40, that's going to now turn into a positive gamma situation. So a lot at stake here in the options market. 5,300 continues to come up very strongly for quite a lot of the OPEXs heading in though. And for anyone that doesn't know, the OPEX is the third options expiration. It's been a little hard to read 0DTEs this week because we know that there was so much fluctuations through there. But remember, the TA comes first. TA number 1, flows and data number 2, and number 3. They're the golden triple, I guess, that I would use when it comes to day trading and investing. Why? Because it's so important to get edge. And how do you get edge? Well, TA is the ultimate edge. That's the psychology of the market. Data and flows give you confidence to follow your edge. And I love that kind of method. And that's why we use things such as these CTAs, these nasty algorithm CTAs. So what have they been doing? Well, they freaked out and they sold. That's because every indicator was saying sell, 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 sell. They freaked out and dumped the position. You'll notice a little buy, not an aggressive buy yet. So, of course, we're looking to get more data on that this weekend, which we will. Same with the NASDAQ. Silver dropped off, coming back more to normality here. This is good. You know, unwind here is not the end of the world for silver bulls. And as you'll see, we're actually finding a very good support level for that. Brent back down to support. Gold, okay, dropped off, but starting to find buyers. Love gold on this channel. We talked about this quite a lot. $3,000 an ounce gold is our aim over the next 12 to 18 months. Copper, yep, it's dumped off. Now back to neutrality. So certainly could be looking at structure. We'll look at copper today. And we'll move over to Tesla now. Now, Tesla held 200. We had many different comments from my comment over the last 24 hours, and a lot of you don't seem too worried about it. So I thought I'd mention it. But either way, the main thing here is to follow, of course, number 1, the TA. Number 2, we're going for the data and the flows. So what do the flows tell us? Well, 200, there seems to be a weird amount of strikes on this. Not sure even if that's real, but there's a decent amount of calls coming around here. 200 is also the strike for next week expiration. So I think if we're able to hold above 200, that could get a lot of bulls back into the market. A lot of retail flow comes through. 200 plus closure on the daily. Then they might need to start doing a little bit of hedging of these big call levels. And that can, of course, create a positive gamma flow, which we've seen before. So it may feed upon itself. 200 will be the level to watch, though, on Tesla. We'll keep an eye on it. NVIDIA, things are looking better. Great 24 hours, 105 being strong. And as we know, we were thinking between 100 and kind of 110 being a chop for NVIDIA. This is going to be like the area of struggle. So it could be that we're on track to find the 110. And if we find the 110, what are we probably going to be doing? Maybe hitting the 54.40 on the S&P. So again, a good confluence zone with the most important stock in the world, with the most important index in the world. Let's now move over to the overall futures action here. And you'll notice that when we talk about lead indicators, the S&P 500 has been seeing support. Central bank liquidity and world central bank liquidity both increased this week as markets freaked out. No surprises. They just won't let this thing tank. Bank of Japan, of course, got involved again. Oh, don't worry, guys. We won't raise interest rates again. What a joke they are. Absolute jokers, clowns. It's just the typical thing. They stuffed their economy. They totally ruined the financial system over there. And eventually, yes, I believe it will blow up. But at the same time, Yeah, knee-jerk reactions. Anyone will do anything to keep these things going. The VIX dropped from 65 down to 24. That's a pretty big drop. You can see here there was a massive freak out in one of our leads that we often use here on the channel, but it wasn't really something that we saw early. Like, this is not going to be, I just wanted to bring this up because we got that massive freak out and we've dumped from that point. And when you get these massive freakouts and you dump, that usually is a good sign. Again, here's massive freakouts and then we dump. A good sign that the volatility is starting to come out of the market and maybe we've seen the low. So interesting factor there. And that's, of course, taking into consideration bonds options. US 2-year, 3.77, okay, sitting down near the low. Still no uninversion of yield, so that's an important note. And treasuries fell off. Bad auctions going through. Treasuries comes down. Good level, actually, for a long-term bull here. Look, the thing with treasuries, as I've often said, you shouldn't really trade them very much. If you were trading, you had to take profit here. You had to, because otherwise you're going to be set holding the bag for 12 to 18 months. If you have that type of time horizon, treasuries are not the worst buy at this zone. We know there's tons of transactions. Like we've shown it so many times on the show. Dark pools everywhere here, guys. Someone does buy this area. And they're buying with a long-term approach. It's probably Buffett. Doesn't he own more treasuries than the Fed itself at this stage? I don't know, something like that. It's pretty wild. KRE, what's going on there? Yep, regional banks are doing well. Home builders are pulling back up, which is good. And of course, REITs are doing all right. Dollar index starting to get closer to that sell zone, but not quite there yet. So certainly an interesting point. And when we move over to the more interesting markets, gold finding some buyers. So gold actually is in a little bit of a possible uptrend here. You've got kind of like a switch towards the upside. It's not my favorite type of trade, but if you did want to do it, and we've talked about this, I think it's a bit more neutral here. We're bullish on the weekly, we're bullish on the daily, but it has to hold 23.56, so just a little bit lower than that. So if it doesn't hold those lower lows, that's going to be a problem for it. Gold improved though, last 24 hours. I think the more interesting one's silver. Silver came down and tapped that 26.50 zone again. Love that area. Very bullish. Great little structure, small time frame. Looked good. Now it's gone through the super bull switch silver zone. So that's again strong into this weekend. It points towards pullbacks to 27 to be met with bull demand. And I think that's important when we're looking at these numbers. So silver certainly improving. UK oil, another one we had this week towards the long side, certainly looking pretty good. And you'll notice that we're on track here for that 80. This was actually the better structure. It was better than US oil in terms of overall trade. And someone said, what's Brent? Who's Brent and why do I need to know him? I love that comment. If you check it out, it's a great comment. It's very, very funny with you guys' responses there. But I do love the comment section. US oil, let's move over here again. 76.50 is our target. So close to that. Beautiful replication trade. Straight out of our day trading masterclass. If you're ever interested in finding out more about it, that is a banger trade. It's very replicable. You could do it 100 times and probably win about 70 of them. So you are getting probably around a 70% win rate on that type of trade. And we saw the same type of thing set up on other markets as well this week. So there's been a couple of good ones. Let's move over now to the Chinese market. Very, very nice. And this is moving to 377 at this point. Not quite through it. And we know that, of course, if we get HSI above 17.4, that's very strong. Island reversal as well on the HSI coming out of the gates very strongly today. Gap down, gap up. Chinese stocks starting to show some serious improvement. For some scale-in traders, they'll like that. Through the downward trend line, some nice things there. A few other people have mentioned copper, so I thought we'd bring this one up because has copper changed trend? Well, daily, no, it hasn't. And if we go on to smaller time frames, it's starting to try. It's starting to put pressure on this top end, which we've had on the downside. Not prepared to call copper having its low just yet. We know that we had one bad trade from this because you got good and bad, so it was a bad trade. And that one gave up. So to go against the copper trend, it's like a freight train. It does have signs of recovery in it, but we'll need to be more patient. SMH, semiconductors, a little bit up here on the session, of course, improving overall and making sure that we were going towards that 229. So there's still a gap fill here on semis. In general, the only semi that really matters to the market is going to be NVDA. The rest will follow. And NVDA gets this beautiful 2-hour bullish pin, comes back up, ends up 6.13% up, and of course comes off that level we thought. We actually nailed this zone And yeah, it's again a replicable setup. So I like that setup coming off the base. We'll find out whether we can continue to find strength, and that's going to be back now to the US 500 breaking through those key zones we saw before. Crowd also still rallying, and this is rallying after a drop. Again, I don't think it's great investment level because they're going to cop a lot of lawsuits, but that's what happens when you get an oversold market. And of course, next week, we've got some targets for these oversold style markets, such as Intel, Disney, and others. Things that have really gotten beaten down. There could be some good day trades on these moving forward. We'll look for more information. I don't know why we've got Sol here, but we'll get rid of that. And we'll move over to US 2K. Solana is a fairly decent crypto. It's probably almost beating out Ethereum at this point. But let's move over to the US 2000 because the US 2000 is key. And it came to the most traded zone. It found buying pressure. It didn't quite break through the highs, similar to all the other markets. It's a little bit weaker than the NASDAQ, which is to be expected. And I think the NASDAQ and the S&P will lead this one, but still it's a great zone. US 30 looks the same as all the others. They came in so horribly yesterday. This nasty double rejection wick. Now we're trying to break through above that. If we do, we move towards the gap fills. And of course, the Dow is sitting at that exact point of resistance. Same thing with the NASDAQ. If you have a look here, the NASDAQ has basically come through. It found that beautiful buy zone we saw over the last 24 hours, similar to the S&P. And if it closes like this, imagine if the weekly closed like this, that is a huge bullish wick. Now, that is the type of thing that gets a bull excited about buying the dip. Will it hold? We don't know yet. Of course, downward, the trend line itself is a problem. You've got gap fill. Again, I would use the US 500 as the code, 5440. But if we keep going bullish here over the next 24 hours, we could easily hit that early next week. And then we'll find out whether a bear is willing to actually try to cut this market down. Now, I know what Solana was being replaced by. It was Tesla. So basically, we can see here that Tesla found buyers again at the 185. And this has been the key level that we spoke about earlier in the week. If we go to the 2-hour chart, it's holding up as well as it can. So not quite getting back to the high, though. You really should have seen by the end of the day, Tesla back at 203. So it is weaker. We know the 200 is the strike to watch next week. And of course, options markets will be key. So if it gets through 200 early, starts to close, next moves could be 225. You've got to leave your opinion at the door when it comes to any of these things. As an investor, I do have some little concerns here about Tesla, even though it's much cheaper price. As a trader, why would we care? We look for replication, yeah? So just remember, it doesn't matter what you feel like on a stock. If you feel good or bad towards it, your opinion really doesn't mean anything when it comes to trading. So trading and investing, totally different things. And I think we all know that, but sometimes we forget about it in the heat of the moment. Let's move over to crypto, not Solana, and have a look here at Bitcoin. Bitcoin back to the 61.8 fib, back to some problem zones, 20 moving average, previous anchored VWAP, which was key, and of course another anchored VWAP. A bit of issues here. More than likely, we'll have more issues around 66,000 though. That's the most traded zone on Bitcoin. So it's come up strongly. It looks phenomenal when you look at it on the thrust chart. Ethereum is the same thing. It's not as doing as well as Bitcoin, but that's to be expected. Ethereum always goes slower, and it's starting to look pretty good in the cryptoverse. If we do manage to break through some of these key levels, such as this zone and this zone here, and we let's say we close a weekly at 67.5, it's possible. If that did happen, then this market's going to a new all-time high. And again, this is a shakeout, and that would be kind of proven there. So exciting times for the crypto markets. Usually the seasonality would dictate that Bitcoin doesn't do that well or doesn't go ballistic until back of September, but we'll bring that into our weekend daily show and talk about it. I also know volume was up quite largely over on Bitcoin over the last 24 hours. So things are improving there. If you like today's video and you want to learn more, then follow us over on X. Also, if you ever want to check out some of our courses, that particular snippet, Day Trading Masterclass, absolute replication there, guys. And certainly a great week for day traders that were patient. Some great setups, some beautiful ratios, and the possibility even on for a 7-to-1 on the S&P. All right, bye for now. We'll see you in the next video. Catch you guys.